What's going on, guys? Welcome back to another trade recap. So today we ended up taking two trades. One of them was a break-even trade, and then the other one ended up hitting. So let me go ahead and show you guys the trades that we ended up taking. But for the day, we're up a little over 35K on the day. I have these My Funded Future accounts right here. And then I just added these Top Steps yesterday. So these are fresh Top Step accounts. I took a payout on these My Funded Future accounts yesterday and basically just made back the payout and more today. So what I'm probably going to do with these accounts is detach the Top Steps from My Funded Futures and from TradeSync and trade the Top Steps separately, and then have these My Funded Futures still hooked up with TradeSync, and then just secure another payout. And then with that payout, probably add more alpha accounts. So I'll add like 150K advanced accounts and then hook them back all up to TradeSync again. I found that way being a little bit more easier on the mental, especially when scaling. Like, I think I try to go with max allocation or for max allocation with all these firms at the same time. And I just really just ended up, spending a little bit more than I should have been spending on evals. So, which was pretty stupid. So I was like, okay, you know what? In November, I'm going to take it a bit slow and just trade two firms at a time or three firms max. So My Funded Futures, it was My Funded Futures and Funded Next. And then now it's really just these Top Step accounts, right? Top Step just added these. Now I'm trading with My Funded Futures, and it's just been a lot more peaceful. And that is just honestly been the best approach. And just scaling slowly is really just the best approach. There really is no rush to this. But without further ado, let's go ahead and get into the trades that I took. And by the way, if you aren't already in the free Discord, go ahead and join it. I'll leave it in the description below. If you were interested in that, go ahead, check it out, and join the free Discord. But with that being said, let us go ahead and break down the trade finally or the trades that I ended up taking. So market open, not even market open, pre-market, what do we end up seeing? Okay, we are rejecting off of this 4-hour gap right here. All right, we're rejecting off this 4-hour gap, and then price just wants to go lower, right? So now if we look at the hourly time frame, you see that we are very, very close to these lows right here. So all of this right here is low resistance liquidity built up for us to take, rejecting off of this 4-hour gap. And we have previous day low as well. What does this previous day low lined up with as well? This is also lining up with this unfilled daily gap. Okay, there is an unfilled daily gap. And then if we want to end up displacing through the daily gap, we also have this new week opening gap right here. So we have a lot of draws on liquidity. Now, it really just depends on market open and what market open decides to do, because we're really already close to these draws on liquidities. So the only draw on liquidity after this is the new week opening gap. So with that being said, if we play out a few more candles, what do we end up seeing? All right, if we go on the 5-minute time frame on both pairs, we will see that we end up going lower off of market open. And this is where I took my first trade that ended up being break even and ended up running for around like 200 points, which I ended up missing out on. But basically, this was more of a discretionary trade. Actually, both trades were a bit more discretionary. But basically, right off of market open, we have this SMT at these highs right here, right? As you see with ES. What do we have lower as well? All right, if we look at the 4-hour time frame on NQ, we have this unfilled 4-hour right here as well, right? It's resting within a daily, whatever it may be, but this is a potential target, right? At least some sort of relative target. As you see, 4-hour unfilled gap. I'll mark it out for you guys as well, right? That's lining up with the new week opening gap as well. So that was the first target, or basically the only target if that ended up playing out and I didn't end up getting break even on it. So basically, I was going to go break even at the internal low right here. And if we go back to ES so you guys can see a little bit more clearly, skip a few more candles or go back a few more candles, and this is exactly where I entered. So again, as soon as I see the SMT being put in, I enter mid candle somewhere over here. I remember it being a 1-to-1, so whatever a 1-to-1 was. Nope, a little bit lower. Yeah, so it was like around right here. Yeah, so around right here, basically risking 30 points to make 40 points. And I was really certain that this was going to get hit. And when I saw that we ended up getting edged by a tick, that kind of just pissed me off a little bit, because it was not by a tick, but like a few points, right? It was by 2 points. So this ended up getting break even. Unfortunately, it is what it is. And then what happened next was even worse. We just end up displacing like 200 points right after this. Couldn't really do anything about it beside look for a re-entry, which we end up getting right here. So now my thought process going into this trade was, okay, we've already displaced lower, right? We're in this daily unfilled, now it's fulfilled gap. We tap the daily unfilled gap. We're in this daily gap, and we're not seeing any sort of signs of rejection, right? So again, just lining up with the entire higher time frame narrative, we're rejecting off this 4-hour gap, we're displacing lower, we are taking out lower targets, and what is the next drawn liquidity? The next drawn liquidity is this new week opening gap right here, right? So I'm looking for some sort of retrace to get into or to take to this new week opening gap, and I see that we're displacing, so I'm looking for any sort of retrace, honestly, because we're not rejecting off of this daily gap yet, right? So what do? We tap into this 1 minute gap right here, and then I see this candle closure, boom, I'm in this, right? So this is a little bit more of a discretionary trade as well, because again, it's not like a retrace into a 5 minute, 15-minute gap, whatever it may be. It's just more of really just going with the flow and just understanding market conditions and reading current price action. That's all this trade really was, right? I see that we're displacing. We are respecting this gap. We're going lower. Okay, do I have a protected stop? I have a protected stop, okay? Will I be able to manage my position effectively because this is more of an unorthodox slash discretionary, more discretionary entry? Yes, I will be doing that. And we actually do end up managing our position quite well and managing our risk quite effectively right here. So my stop is at a protected place. Now I'm expecting the next candles to continue lower, right? As we see right here, we end up going back higher. We put in a wick higher. We don't end up getting stopped out. And then we get a nice candle close immediately. So when I see this wick, I am immediately thinking about mitigating my risk as much as possible, right? How can I mitigate my risk more, right? Now I take my stop from here and I drag it to now this wick high right here, right? Because off of this candle close, I'm expecting the next candle to just continue to go lower and lower and lower, right? To fill up this new wick opening gap and continue the momentum that we saw before. So I mitigate my risk from risking $1,500 to now risking, I think $930 because I went in with 3 contracts, right? And that is within my risk tolerance. I risk anywhere between $1,000 to $1,500 per trade. And on those 50K My Funded Future accounts, I built a buffer big enough in order for me to risk 3 contracts on a trade, right? So I was risking $1,500, and then immediately, like 2 minutes within the trade, I mitigated my risk to $930. So now after this, I'm looking for more displacement, which we end up getting. Now at this point right here, I move my stop loss to break even, right? So I see the confirmation, boom, I'm now risk-free on this trade. And then now I'm looking to manage my position as effectively as possible. Now, what do I mean by that? I mean trailing my stop aggressively, right? Because I understand that my entry isn't some sort of structured entry where it's like off of a 5-minute gap, 15-minute gap, whatever it may be, where there's some sort of structure, and it's just more going off of again, I'm entering in sort of the middle of the range right here, and I'm being more discretionary with my entry, right? So I realize that, and now I'm just trying to secure as much profit as possible, right? Because there's no reason for you to be up 90% on your position and then letting it run break even just for an extra 10%, right? It doesn't make sense, just for an extra few points. So at this point, I see this candle and I'm like, okay, I see this candle close right here. I'm expecting the next candles to just flush through. And if it doesn't, I don't want to be in this position. And with enough trades taken like this, right, knowing that, I'm kind of entering towards the middle of the range or, a little bit more unorthodox, I want to protect my position as much as possible because they just end up going break even. And that's exactly what ended up happening here if I didn't manage my position and trail my stop as aggressively as I did. So I trailed my stop to, I think, around right here. I think I secured around like 65 points. That's what it was. Secured around like 65 points, maybe 70 points, something like that. But I was monitoring what the other candle did, right? So what do we see? I just closed my position right here, right? I really just closed my position right here because I saw that we wick lower and then we start to retrace back up. And I'm like, okay, I'm closing my position at around like 70, 65 points, something like that, just to secure the profit, right? Because there's no point, again, in me being up 90% in my position and risking it for an extra 30 points. There's no point. So I close out on this trade right here for a good 70 points, I think. Maybe 65 points. I think it was 65 points, something like that. But yeah, 70 points, something like that. I don't really exactly remember. It's just whatever this comes out to, right? 3,500 bucks with three contracts. But after that, right, we just end up reversing, and look what happens, right? We go all the way up here. Boom, we put in an SMT again with the high, the 9:30 a.m. high, and then we just end up going lower and then finally taking the new week opening gap, right? So the drawn liquidity was there, right? So what is there to learn from this? The drawn liquidity was there. I was right about the drawn liquidity, but my entry, it was a protected entry still, right? I still want you guys to keep in mind this overall trade was a 1 to 2.6 R trade, right? But just understanding when to manage your position, be more aggressive when trailing your stop is super important, right? Because if I ended up holding this trade and I just had my stop at break even, 70 points, 65 points of profit would have went straight back to break even. And that should not happen. That should not happen. When you see price slowing down, take your profit, right? Especially when you're pretty close to the TP. There's no actual point in trying to hold if you're up a good amount in your position, right? So with that being said, that was really those were the two trades that I took. And today was a very big day because I managed my risk effectively and I also managed my position effectively, which allowed me to secure profit on this trade. So yeah, that's it from me, guys. I hope you guys enjoyed this video. I hope you guys enjoyed the analysis. Once again, if you're not in the free Discord, I'll leave it in the description below. Go ahead and join up. But that's it from me, guys. Hope you guys have a great rest of your day, and I will see you guys in the next video. Peace.